Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within those dense corporate filings and maybe find some hidden treasures along the way. Today, we're diving into an amendment to Medtronic PLC's annual report. This is for their Puerto Rico employees' savings and investment plan. It seems like they forgot some computer code, really. Basically, this is just a little update to a report they already filed. The main reason for this update, and this is kind of funny, is that they accidentally left out some important computer tags that help organize financial information called IXBRL data tagging. So they're just adding those in now, no big changes to the actual financial story. But it is good. They're dotting their I's and crossing their T's. This report is all about the Medtronic Puerto Rico employees' savings and investment plan. Think of it as a retirement savings plan for employees in Puerto Rico who work for Medtronic. The company puts money in employees can put money in, and it all grows over time for their retirement. The auditors, PricewaterhouseCoopers LLP, has given this report the thumbs up. They say the financial statements present fairly, which is a good thing. They've audited the plan's finances for the year ending the 30th of April 2025, and they're registered with the PCAOB, which is the Public Company Accounting Oversight Board. Now, let's peek at the numbers. These are the statements of net assets available for benefits, essentially what the plan has in total at the end of the year. For the 30th of April 2025, the total investments are a little over $373 million. That is up from about $336 million in 2024. So, the plan has grown, which is a positive sign that investments are doing well. The big chunk here is the plan's interest in the Medtronic Inc. Master Trust Fund. This means the plan's money is pooled together with other Medtronic retirement plans for investment purposes. It is like a big pot where all the retirement money from different Medtronic plans in the area goes to be invested. That pool grew by about $36 million. Something interesting here are the notes receivable from participants, which are essentially loans to employees from their own retirement accounts. In 2025, these loans stood at nearly $12 million, up from about $10 million in 2024. While it's common for retirement plans to offer loans, it's important to remember this is money employees are borrowing from their future selves. Moving on to how those assets changed. For the year ending the 30th of April 2025, the plan saw total additions of over $65 million. Most of that came from contributions. Participants, meaning the employees themselves, contributed about $18.6 million. Employer contributions, which is Medtronic putting money in, added another $16.4 million. There were also rollover contributions where people moved money from other retirement accounts, totaling about $285,000. On the other side, the plan paid out just under $28 million in benefits to participants who are retiring or leaving the company. So, when you tally it all up, the net increase in the plan's assets for the year was about $37.6 million, bringing the total from $348.6 million at the start of the year to that $386.2 million at the end. This shows healthy growth in the plan. Let's dig a little deeper into what this plan actually is. It is set up to help employees build retirement savings and financial security. It has three main parts. The first is the traditional component where employees can put in their own money through payroll deductions and Medtronic matches a portion of it. Think of it as dollar for dollar up to a certain amount. Employees have a lot of choices for where their money goes. From Medtronic's own stock to mutual funds and investment contracts that are designed to be very stable. So, if an employee contributes up to 6% of their salary, Medtronic will contribute half of that amount. For example, if an employee puts in $600, Medtronic puts in $300. This was for employees who joined before May 1, 2016. It is basically an extra employer contribution to a retirement account. This is for employees who joined on or after May 1, 2016. They automatically get an extra contribution from Medtronic. Now, how do they value all these investments? This section talks about fair value measurements, which is how they figure out what things are worth. They use a hierarchy, like levels, to figure this out. Level 1 investments are things you can easily see the price for, like quoted prices for identical assets in active markets. Think of stocks traded on major exchanges. So, Medtronic's own stock, if it is traded on a big exchange, would likely be level 1. Level 2 is a bit more complex. It includes things like similar assets or prices in less active markets. And level 3 is for things where the price is harder to pin down, based on internal assumptions and not readily available market data. The plan invests in things like mutual funds and collective trusts. These are often valued at their net asset value or NAV, which is what they're worth per share at any given time. This is usually pretty straightforward. The report says most of their investments are either level 1 or valued using the NAV practical expedient. Looking at the total investments in the master trust at fair value for the 30th of April 2025, it is a massive $13.7 billion. That's quite a kitty. The plan's specific interest in this master trust is about $373 million, as we saw earlier. A big chunk of those master trust investments, over $11.9 billion, are in collective trusts. These are basically funds of funds, meaning they invest in other investment companies. That part is valued using the NAV practical expedient. The table here shows that these collective trusts can be redeemed daily, and there are no current restrictions or unfunded commitments. This means participants can generally get their money out when they need it, which is important for a retirement plan. This next section provides more detail on how the plan's money is invested within that big master trust. It breaks down the plan's specific holdings. As of the 30th of April 2025, the plan's interest in the master trust was $373,259,000, or $373 million. This is broken down into collective trusts, registered investment companies, Medtronic's own stock funds, and a self-directed brokerage account. Interestingly, a significant portion, over $510 million, is in something called the Medtronic Capital Preservation Fund. This fund is made up of fully benefit responsive investment contracts, like guaranteed investment contracts, or GICs. These are generally considered low risk and aim to preserve capital. This section is about transactions involving parties that have a close relationship with the plan. For example, the plan invests in Medtronic PLC's ordinary shares. The Master Trust bought about $12 million worth of Medtronic shares and sold around $66 million worth. This is perfectly normal for a company's own retirement plan to hold its own stock. And yes, those employee loans we saw earlier are classified as party in interest transactions. Since they are specifically allowed under the plan and certain Puerto Rico tax rules, they are exempt from prohibited transaction rules. The plan seems to have a good standing with the Puerto Rico Treasury Department, having received a favorable determination letter. They believe they're operating in compliance with applicable tax rules, so no income tax provision is included in the financial statements. This part is for reconciling the plan's financial statements with something called Form 5500, which is a regulatory filing. It shows how the numbers line up between the two reports. For example, the net assets available for benefits on the financial statements were $386.2 million, while on Form 5500 it is listed as $386.1 million. The difference is due to how certain loans are treated. Finally, this section covers events that happened after the reporting period ended, but before the report was officially issued. In this case, the evaluation was done through the 20th of October 2025, and there were no significant subsequent events to report. So, what is the takeaway here? This is primarily an update filing to correct some technical details. The underlying financial health of the Medtronic Puerto Rico employees' savings and investment plan appears solid. It has grown year over year with healthy contributions and reasonable investment income. The plan offers diverse investment options and allows for employee loans, which is common. The fact that they are holding their own company stock is also standard practice for employee benefit plans. While the total value of the Master Trust is huge, the plan's specific allocation makes up a smaller but growing portion. There are no red flags or major concerns jumping out from this particular filing. It is essentially saying, we're running smoothly, just forgot a few computer tags. Alright? That is our breakdown of this Medtronic filing. What are your thoughts on employee savings plans and the way companies manage them? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deciphering. And don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and I'll see you in the next video.